the golden standards is the issue. So I don't think for the two issues that I raised, an answer.
Hello and welcome. You're watching BTTV. This is Market Today. I'm Tanya Aneja and with me is Shail Bhatnagar, our markets editor. Well, bears were in full control on the last read yesterday, tracking global weakness. But now the question is that will bears remain on the driver's seat today as well? Well, we'll discuss this and much more. But first up, the top headlines for you. Bulls hope for some respite on the Nifty after 3 sessions of heavy selling pushed the index near a 1-month low. Underlying sentiment remains bullish as domestic institutions step up purchases to shore up support. Bulls remains on the back foot globally as a rating downgrade of the US economy and rising US bond yields keep pressure on equity sentiment, even as earnings from Amazon and Apple handsomely beat expectations. Very good morning, Shail. Indian equities ended lower for the third straight day amid weak global cues. Except for pharma, weakness was seen across the sectors, but thank God it's Friday today. So let's discuss the Nifty strategy first, and where do you see Nifty after this pullback?
So good morning, Tanya, and you mentioned the most important theme of the day, that it's Friday right up front, and let's hope. We've seen 3 days of very, very strong selling coming on the Wall Street. In fact, let's just say it's profit booking. And if you see the market from July 26th onwards, we've had 6 sessions. Out of those 6, 5 have ended in the red. As a consequence, 2 things have happened. The Nifty is now at its lowest level since mid of July. That's a 1-month low that we are seeing. And what's more important is that for the bulls or for the bears, the index is below the operational 20 EMA. Not that the buy on dip strategy is not working, but at 20 you pause and you rethink the entire matrix, and that is what happening. So now the 50 EMA for the Nifty is somewhere like 19,160. We've also seen the index expand toward the lower side in terms of the trading range. Last 2 days trading range, that is the difference between high and low, is anywhere between 240 to 260 points, and the Nifty is closing towards day's lows. So those are worrisome points when you see it from the point of view of bulls. But the fact is that we've had a fantastic rally, and as you so rightly pointed out in the headlines, it's more because of the US ratings downgrade by Fitch more than anything that has to do domestically. In fact, if you see so many positive things that have come up in today's financial papers, the July PMI is at about 62.3. That's the highest in 13 years. Bharti Airtel's ARPU, which we'll discuss a bit later, is at a decade high. All around that you see in GST numbers, in short indicators like electricity consumption, vehicle sales, all of them are doing good. But this is a normal round of profit booking, and that's what it is. If you see the calls and options data, you'll see the trade somewhere between 19,200 to 19,600 as far as the Nifty range is concerned. Very, very strong supports coming in via put writing at 19,200 and 19,300, and the top line at the moment, which is the resistance, remains at 19,500, 19,600. So I would imagine that you leave the Nifty to its fate for a while. It's been a fabulous party. We are just resting a bit, and at the moment, if you look at heavyweights like HDFC Bank, RIL, ICICI, Axis, State Bank of India, their daily charts are showing some weakness which is creeping in. So I would imagine that the trend should be consolidating to weak on the downside, but it's a Friday. We've seen 3 down days. Let's hope the first day of the weekly expiry brings good news to the bulls, Tanya.
Absolutely, Shell. I also hope the same. But let's talk about Bank Nifty as well. The Bank Nifty, extended its downward journey for the 3rd straight session. And however, it managed to take support at 44,500 mark due to recovery in late trade. But what are you looking on Nifty Bank today?
Yes. So, Tanya, the same setup is repeated, but the Nifty Bank is weaker still. It's breached the 50 EMA, which is a point of concern as far as the bulls are concerned. And we've seen about, something like a 50 to 1800 point correction since the time the recent peak was hit on July 21. So, the pain on the Bank Nifty is slightly on the higher side. No amount of good news, strong earnings by ICICI Bank, Axis Bank, a blowout quarter by HDFC Bank. All of them were actually priced in the rally that you saw till about 46,500. And at the moment, you see the Nifty at its lowest since June 28. I'm talking about the Bank Nifty, which is a 5-week low. So these are worrisome points, but let us see. Like I said, the party was fantastic, about a 3,000 point rise, of which 1,800 to 1,500 have been taken back by the market. It's okay. Things will improve. Let the first week of August die down, and then we'll take a fresh stance on Monday. It being a Friday, I'm sure not many bears are willing to extend their short positions beyond the 3-day breach that has already happened. But let's see. Tanya.
Okay, absolutely. So that was Bank Nifty for you, but lots to track when it comes to FNO space as well, Shal. So what are you looking at, in the FNO space today?
So, Tanya, we've had 2 great earnings that have come in post-market hours. One from, and both of them Delhi companies. Aisha Motors, the maker of the renowned Royal Enfield bike, and Bharti Airtel, a very, very strong player on the GSM side on the telecom space. So, these 2 will not only impact the sentiment positively on their own stocks, but they are likely to also buttress the Nifty, since both of them are Nifty stocks. Bharti's announced a very strong quarter. Its average revenue per user is at a decadal high, and the operating margin at Aisha is at 44%. So strong pricing power there. But in terms of stock futures that I'm looking at, let me just spare a couple of moments on one counter, which is of course IRCTC. Very strong traction seen yesterday, 3.7% higher on the price, 663, and the open interest is up about 2%. What's really heartening is that its delivery statistics, cash deliveries are somewhere like 2x more than what it was on Tuesday. So very, very strong numbers coming in as far as IRCT is concerned. Dixon Technologies, we've seen the government move very, very, how should I say, harshly on restricting imports of electronic items. Dixon is the largest producer of such laptops, phones and air conditioners in India, and this is obviously a move that was very well appreciated by the market yesterday. 7.4% higher on the price, an increase of 2% on the open interest, and a 3x rise in deliveries as far as the cash market is concerned for Dixon. 44.65 is what I see. And of course, the two pharma twins, Lupin and Aurobindo Pharma. Lupin came out with a blowout quarter, so earnings are looking good, and the stock on the long-term charts, the monthly charts, is showing an excellent traction at about 1039. It closed about 4% higher, very strong delivery statistics. The thing that I probably want to say is that today might not be the day where you chase price. Just sit around, see how the market settles in the first hour of trade, and then we'll take a call. Tanya.
Okay, absolutely, Shail. And we'll come to global markets as well. But meanwhile, let's talk about IPO market as well. Big Bull Rakesh Jhunjhunwala's Rare Enterprises backed Concord Biotech IPO is all set to open, for subscription today. My colleague Pawan Nahar is with us, and he's going to tell us more about this IPO. Pawan, take it away.
Good morning, Tal. Good morning, Shail. Good morning, Tanya. So IPO festival continues at Dalal Street as the second IPO of this month, August, will open today. So Ahmedabad-based Concord Biotech is coming up with its primary stake sale today, and the issue can be subscribed till Tuesday, that is August 8th. And the price band for this issue has been fixed at rupees 705 to 741 per share, and the lot size has been fixed at 20 shares. Company is looking to raise 1551 crores, which is a complete offer for sale by Helix Investment Holdings. So talking about the business of Concord Biotech, Tanya, it is a R&D driven biopharma company which manufactures API through fermentation and semi-synthetic processes, and it has presence in more than 70 countries other than India. It includes China, Japan, Europe, and USA. Kotak Mahindra Capital Company, Citigroup, and Jefferies are the lead managers for the issue, while Lincoln Time India is the registrar for the issue. Company has reserved 50% of shares for QIBs, 15% for non-institutional investors, and remaining 35% will go to the retail investors. And Lincoln Time is the registrar for the issue. So company in its RHP has cited Divi's Labs, Suven Pharma, Shilpa Medicare, and Loris Labs as its listed peers. So Tanya, brokerage firms are mostly positive on the issue, but the only concern they see is the rich valuations and the OFS nature of the issue. Over to you, Tanya.
Okay, absolutely. And Pawan, since you also track banking sector, and SBI will be in focus today, as the company will be, releasing its earnings today. The earnings growth is likely to stay strong during the first quarter of June 2023, supported by treasury gains. So why don't you, tell us about SBI and what to really expect from this bank as far as earnings are concerned?
Definitely, Tanya. So SBI, the largest bank of country, is likely to announce its earnings today, and the earnings are expected on a very, very strong note on a year-on-year basis. So the SBI is likely to report a net profit in the range of 13,200 crores to 15,800 crores, signaling a gain of 120 to 160% on a year-on-year basis, while sequentially they are seen slightly down, say 6 to 16%. And net interest income, which are the NIIs, are seen around 39,400 crores to 41,200 crores, up by 26 to 32% on a year-on basis. But the sequential net interest income is seen flat. Pre-provisioning operating profit may double on a year-on-year basis, and it's seen in the range of 22,000 to 25,000 crores. However, net margins or the NIMs may decline slightly, say 20 basis points on a sequential basis. That's all from my side, Tanya.
Okay, thanks much for that, Pawan. And let me get back to Shail, you now. And discuss global markets. So if you talk about global markets, US stocks closed little changed yesterday after a choppy trading session. As you know, investors weighed another rise in treasury yields with the latest batch of economic data and earnings. Dow was down around 0.19%, S&P 500 down 0.25%, and Nasdaq also 0.1%. And oil prices, all eyes are now on oil prices, and the prices rose for a second day today, and they are also set for their sixth week of gains after Saudi Arabia and Russia pledged to cut output through next month. So Asian markets are also trading on a mixed note, but what is now essential to track from overseas cues?
So, Tanya, we will track things that are under our control and very, very safely bypass things on which we have zero impact on, which includes the reactions to the change in ratings by Fitch on the US economy. There's nothing we can do, and no point getting worried. Look at how the companies are reacting to it. There's been a blowout quarter both by Apple and Amazon. Not only have they announced quarterly earnings that have beaten expectations at Wall Street, but they've also improved their guidance. Now the broader markets in the US, which is the Dow, the Nasdaq, as well as the S&P 500, are again down for the third or the fourth day because of this cut in the global ratings of the US economy. But again, like I said, the party was really, really strong. You had seen a 20-month high on the Dow Jones index, and now the bill has come, and you have to pay that bill fast a bit, and then again reboot on your horses and start buying the dip. So no less a person than Mr. Warren Buffett has said that he won't be overtly bothered about the cut in US ratings. Of course, they raise some very important points, including the debt payments and the size of the US debt. But what can be done? So if nothing can be done, then we wait for quality stocks to come down to buying zones, and then we buy the dip. Trust me, over the last 27-30 years, I have been seeing this macroeconomic thing that happens. Ratings go up, ratings come down, but quality stocks always appreciate, multiply and compound, and that is what we should focus on, Tanya. Of course, crude oil is a bit worrisome. Sixth week of gains, as you rightly pointed out. We are at a 3-month high, and that's also getting priced into Indian equities. Remember, we import about 80% of our domestic crude requirements, and since prices are sort of on the uptrend, that hits sentiment on Dalal Street. Tanya.
Okay, absolutely. And let's do one thing, Shail. I think our market guest, he's with us as we speak, and let's welcome him. We have with us Mr. Avinash Gorakshakar. He's the head of research at Profit Mart Securities. Good morning, Avinash, and thank you so much for taking the time out and joining us here on Business Today Television. And as Shail was saying, we had a fantastic party, but I think market, seems to have changed direction now. But where do you see, markets headed if we talk about near term?
Yeah, good morning, Tanya. I think broadly, the markets are undergoing a sentimental correction, but on the macro numbers, on the data points, I think the Indian market is well positioned. These kind of hiccups in the markets are quite common. As Shail mentioned that markets have a habit of going up very fast and then reacting during certain key kind of events. The US downgrade which came from Fitch is unlikely to have a very major impact on the Indian markets. More importantly, I think it could at best last for a week or so. Markets are very happy that the corporate results season this time has been much better than expectations. Most of the companies we have been talking have sounded very positive. The business commentary has been very good. So my sense is, I think this is a passing phase which the markets will take it in its stride, and I think we'll be looking at stock-specific activity. Even today is a very heavy result day, and we'll be seeing a lot of companies posting their Q1 numbers. So I think clearly the markets are now looking at key data points. More importantly, the markets having risen so fast from April, there was some reason expected for a market correction, and that is exactly what has happened. So I think net, I think, sectors like automobiles, auto components, real estate, capital goods, these are sectors where I feel there is a lot of value even now. And I think you need to be stock specific to get an alpha over the next, say, 6 to 12 months.
Wonderful. Good morning, Avinash. Such a pleasure to host you on Business Today Television. We go back 2 decades, and it was fairly recently that Avinash and I made a trip to up north to see a particular factory. Good meeting you on air, Avinash. And let's discuss some stock ideas which are for the long term. Remember, these are portfolio picks that Avinash will discuss. And let's start, Avinash. What do you think is still adequately and reasonably priced in Indian markets today?
Yeah, I think good morning, Shail. See, I think we've got two stock ideas which we believe have got a lot of value and firepower to actually get re-rated further. The first company is MGL, that is Mahanagar Gas. The company came out with very strong numbers. In fact, the interesting part about the quarter one numbers this time was that the operating EBITDA has almost doubled. EBITDA margins have moved up from almost 27, 28% to 34%. The key reason is natural gas prices have come down, and both the PNG as well as the CNG volume has been in almost mid to double digits. Our sense is, in the natural gas space, especially the CNG gas space, this is an extremely undervalued stock. Despite the fact that its fundamentals are very rock solid. Our sense is that compared to last year's earnings of almost 78 rupees, this year we could see an earnings of almost 97 to 98 rupees. This is a debt-free business which generates an ROE and a return on capital employed of almost 24 to 25%. And I think the earnings growth over the next, say, 12 to 18 months looks well positioned. So here, Share, we are advising our clients to buy at the current level for a target price of at least 1400 over the next 12 to 15 months. And the other company is a small listed company in the oil and gas space. Again, it's called Deep Industries. Now this is India's largest outsourcing gas compression player. It's got a niche market in gas dehydration as well as integrated project management. And the numbers may look small, but on a top line of 340 crores last year, they made a EBITDA of 140 crores and a profit after tax of 125 crores. The first quarter numbers have also been very solid, 30 crores profit compared to 19 crores in Q1 of last year. A very strong order book of almost 1160 crores, no debt on the books. And obviously, they have now also announced last year the acquisition of Dolphin Offshore, which I think you must be remembering. It was a very old company with a very good asset base. The company is now going to be starting operations
Yes.
in the second half of FY24. So I think that also is going to be a key trigger. And lastly, without wasting time, the Dolphin Offshore is going to be listed again. So, you could see a lot of action on the stock once it gets listed again and some value unlocking for Deep. So here also, I think you would look at a target price of 330, 335 over the next, say, 12 to 15 months.
Okay, let's go backwards. At 233, Deep Industries is already at a record high, and remember, this is after a recent split that the company had announced on the stock price. Despite it being a record high, the counter is at a PE of just 10, a market capitalization of somewhere like 1500 crores and a revenue stream of 370 crores. So it's an extremely high margin business. On a revenue of 370 crores over the last 12 months, the company's posted an earnings of about 144 crores. It has a cash of 90 crores on the balance sheet and a minuscule debt of 31. So on a net debt basis, the company is on a positive ground, and of course at about 63%, that's the promoter ownership as far as Deep Industries is concerned. If you look at the peer comparison, Avinash very rightly mentions that it's compared with its peers, it's priced at a fairly substantially discount level. Very strong EBIT and net operating margins, return on equity at about 50% over the last 3 years. So these are very, very good numbers to look at. The only issue here is that the company, which is Deep Industries, is trading at a record high. So adequate caution needs to be taken into account if you stop or if you start a buy in this particular counter. And of course, Mahanagar Gas, an undervalued public sector asset which recently got listed about 5-7 years ago. Very, very strong earnings that have come out, and that's getting reflected in the stock. Avinash, coming back to Mahanagar, the all-time high for this counter is something like 1370 rupees, which got stuck in December of 2017. So far, we've seen 1120. Would you estimate a 1 year horizon for the chart, and where do you think fundamentally the stock should be quoting at?
So I think Shail, frankly, I look at the fundamentals and not the charts, but I think looking at the valuation multiple, the stock trades at a forward multiple of almost 11 times. And I think for a company like MGL, which has got a very large base in Maharashtra, both from the commercial segment as well as from the industrial segment, I would believe that CNG is now kind of a fuel which is increasingly catching up. And I think even companies like now been focusing more on the CNG kind of product mix for their vehicles. So clearly you could see that multiples could expand to at least 13 to 14 times. And I think, a debt-free balance sheet, ROE of almost 20-25%, earnings growth of almost 20% plus, and a virtual monopoly in its business. Because as you realize that all these gas companies are localized, you have Indraprastha in Delhi, Gujarat Gas in Gujarat. So typically, I think the gas market is growing quite rapidly. The government is also encouraging clean energy. So to that extent, I think a price of 1400 is very much possible, and I think this is a very conservative target. We believe that a lot of institutions and a lot of HNIs, PMSs have already entered, but I think the stock will gradually get re-rated as numbers come in for the second and third quarter also.
Okay, absolutely. And Shail, it's the earnings season, so let's focus on that as well. So, Bharti Airtel and Aisha Motors, these stocks will be in focus today on the back of their earnings. So, Bharti Airtel reported its numbers yesterday. The company maintained its, industry-leading growth in line with the expectations. The average revenue per user per month also increased 9% year on year to 200 rupees. And also Aisha Motors continued its strong run with its best ever performance for the fourth consecutive quarter. My colleague Akansha Chaturvedi is now with us, and she's going to tell us more about Aisha Motors and Bharti Airtel. Akansha, take it away.
Good morning to everyone. Like Tanya said, that Bharti Airtel did put up good numbers, but it's worth noting that their consolidated net profit only went up marginally at around 0.34% year on year. And this one thing that really impacted the business was the fact that their African arm clocked losses due to the Nigerian currency devaluation. But this was sort of offset by greater adoption of postpaid in India. And Tanya already mentioned the average revenue per user. It's an important metric when it comes to the telecom industry, and it went up at around 9.28%. If we see how the stock has performed over the last 3 months, over the quarter, we see that Bharti Airtel is up around 21%, which is far better than its peers, say, for example, Idea, which is up just 14%. Another stock, like Tanya mentioned, Aisha Motors, is also going to remain in focus today. Although their net profit did zoom up 50%, and this was driven by, softening of commodity prices and inventorization benefits, as well as the growth in the bike making arm, Royal Enfield. But it's worth noting that the exports of the company declined around 31%. And if you look at the stock over the past 3 quarters, you'll realize that Aisha Motors hasn't really performed that well. If you compare it with its peers, Aisha Motor went up around 1% in the past quarter, whereas Bajaj Auto is up 8.5%, TVS is up 17%, Hero Motor is up over 17%. So maybe the growth that has been achieved in this quarter might help. Now, before I close, I have one question for Shail as well as for our guests. Like we saw yesterday, Zomato also came up with its results. For the first time, they were profitable. But there's one important thing that we noted in the newsroom later. It was that it was profit after tax and not tax. It was not profit. What they've done is, before taxation, they were under loss, and then they've used some tax. They've deferred that loss. They've set it off against their previous losses, and then they are profitable after tax. So, sir, does this in any way change your view on these new age companies? Because once the results came, everybody was very excited about them.
Right, Akanksha. Let's get Avinash on these two stocks, which is Aisha and Bharti. Your views, Avinash, a decadal high on ARPU on Bharti. How does this stock look to you fundamentally?
So I think Shale numbers have been in line, and I think the ARPU number at 200 rupees is definitely a very encouraging sign. I think the Nigerian currency got devalued, and that is why we have seen that the profit growth has not been significant. But I think looking at the fundamentals of the business, I think they are well positioned for the 5G rollout. More importantly, this is a one-off. So I don't think the markets would take it that negatively, because the core fundamental business and the kind of operating metrics have improved significantly. If you remove the devaluation kind of one-off, then I think the numbers look pretty strong, and the management commentary has also been pretty decent. So I think you could see some sort of a bounce back in the second and third quarter. So Bharti, any dip
Right.
should be easy to accumulate.
Right. That is what Avinash's view is on Bharti Airtel. Let's get back to the market. We have initial pre-open trades that are coming in. We have a 55-point drop on the Nifty, in line with what the Gift Nifty mentioned, 19,350 so far. This sector seems to be improving. Okay, let's look at stocks that are doing really well on the Nifty. At the moment, the prices, yes, State Bank of India ahead of earnings, 1.6% higher at 600. Remember, this is a near record level. Axis Bank showing a very strong uptick, 1.3% higher, 947. Aisha Motors post earnings, 2.7% higher, 3470. Remember, margins have been very, very strong. ICICI Bank, 0.5% higher, 970. These are good numbers that are coming in, at least on the pre-open side. Cipla, 0.3% higher, 1170. Bharti Airtel, 0.3% higher, 875. These are on the gainer side on Nifty. Let's look at the downtick that's happening. HDFC Bank, 1.3% lower, 1610. Reliance flat, 2471. On balance, winners outnumber losers. Therefore, the Nifty is back in the green, 1470 up at 19,400. That's what the initial pre-open trades are on the Nifty. Let us see how they settle. A view on the pre-open so far. Let's look at the top gainers list. LIC Housing Finance, 5% higher, 417. Muthoot Finance flat at about 1338. Avinash's favorite for today, Mahanagar Gas, 2.6% higher, post a blowout quarter, 1150. So we need to look at this. Let's look at what the high beta is doing. Laurus Labs, 2% higher, 393. And Dixon Technologies, 2% higher, 4530. The Nifty improving dramatically, now at 19,430, 44 points higher. This is really good news. Let's look at what's driving these. Hindalco, no, it's Aisha, Tata Steel, Adani Enterprises in terms of how the market is looking. HDFC Bank is now improving, now down just 0.5%, 1621. Reliance flat, and I just want to see what Infosys is doing. So if you know what these three stocks are up to, then you know where the index is headed. Infosys up 0.7 at 1374. So the pre-open trades are settling fairly nicely after a 3-day downtick. Nifty at 19,417, up 35 points. Let's see if our technical guest has joined in. Mr. Akshay Bhagwat, he's the Senior Vice President, Derivative Research at JM Financial Services, is with us. Akshay, first your view on the market, and then let's discuss your stock picks.
Good morning all, and thanks for having me on the show. So for the Nifty index, I believe the August series has kick-started slightly on a weak note. Now, the key development was the break of the 19600 zone, because if you look at the prior couple of weeks action, this was a support which was the mighty support, you can say, because it was holding on time and again. And the break of 19600 has been the trigger for covering up of put writing, especially the put writers for the weekly expiry have been caught on the wrong foot. That is the reason why we saw a trigger, a sell off below the 19600 mark. Now, going ahead, where do we see the supports for the Nifty? If you were to look at from an intraday or a day trading perspective today, the highest open interest placement for the coming 10th August weekly expiry on the derivatives data signals that 19400 strike in put has a significant chunk of open interest on the writing side. So we believe the zone of 19300, which the Nifty showed some kind of a rebound in on yesterday's weekly expiry day for the indices, can offer a temporary support as far as day trading goes in today's session. From a positional or a slightly 3 to 5 trading sessions, if you were to look at the Nifty index, then the most important level which we are looking at on the lower end is 19150 to 19200 zone. Our belief is that this is a mighty important support, and from these levels there is a good chance that the Nifty might show a short term bottoming out formation and try to show some good recovery. As it currently stands today, today is the last day of the week, the weekend, so probably you might have an uptick and a quiet trading session where 19400 might be held for the day. So that is the broader view I hold for the Nifty as far as day trading or short term trading.
Right. Akshay, let's take your stock picks one by one. So far in the market, we've seen 3 days of selling pressure, but I'm sure a lot of stocks would be ready for a very nice upswing. What looks good to you on the futures and options chart, and where does the options data point to a nice buy for today?
The couple of stocks which I have on my radar are the two stocks which have withstood the selling carnage which we noted in the last couple of days. The names would be Bandhan Bank and SRF. Now, if you look at Bandhan Bank, this has been rather an underperformer in the last 3 months. This stock, however, for the August series has seen a strong support base building around the 210, 215 odd zone, and possibly it is on the reversal mode on the upside. We see a strong upside for the month of August in Bandhan Bank. The volumes have been great around the 210, 220 level. Block deals are present in this at those support zones. We believe it is heading up for 240 odd levels in the August series. So you can buy Bandhan Bank at the current rate of 227 or 223 if you get it on a dip. You would target 242 on the upside. That will be your first target. And 250 would be your second target. And you can keep a stop loss of 215 on this trade. Now, the other stock which I recommend is SRF Limited. Now, SRF is from the chemical sector, and chemical sector is one which has been heavily beaten down in the last few months. However, we believe, looking at the technical price structure and the derivatives open interest data, that the chemical sector is due for a short-term rebound. Especially here, we like SRF because despite its weak results, it has shown strong resilience and shown a good tendency of a bump up from the 2165, 2170 zone. Volumes are supportive. There are multiple positive divergences on the charts. So we believe this stock is setting up for a good positive up move for the month of August. We would recommend SRF as a buy at 2265 to 2250 levels with a target of 2450 and 2500. As a risk management, you can keep a stop of 2132 on this trade.
Right. We'll start with some data on SRF that you'll see. Remember, the stock has been a fantastic outperformer. If you look at the long-term charts, this is a 4-to-1 stock split, after which the price that you see is in the vicinity of somewhere like 2,000 rupees. And we've seen the stock remain sideways to weak because the chemical sector has seen a lot of problems with the top line pricing. For a 1 month time period, the stock is down about a percent. But if you see the long term charts on a year basis, SRF is still down about 7%. These are of course bad times for the chemical space, but on a daily basis, the SRF chart looks good to Akshay. Coming back to Bandhan Bank, Bandhan was the top performing stock when it came to yesterday's trade, up just 0.5%. But if you see the year performance, that is 1 year from the previous year now, we've seen the stock fall about 19%. So a swing trade in the works as far as Bandhan Bank is concerned, and a very nice momentum seen in SRF if you look at today's forecast by Akshay. Tanya, what are you watching?
Absolutely, Shail. I think let's discuss, some stocks that will be in news on the back of their earnings. So Zomato, I think that stock should come up for you. The company posted a net profit of 2 crore rupees in the first quarter of the current financial year. It turned, of course, profitable. So all eyes will be on this stock today. And let's see how the action pans out going forward. But we also have, Mahindra and Mahindra, M&M, that stock will be in focus. The company will be posting its numbers. Britannia Industries, yet another counter that will be in focus today. On the back of the numbers, that stock should come up for you. And let's see how the pre-open rates are happening for these stocks. So BHEL, this stock will be in focus on the back of, ahead of its Q1 earnings delivery. Another stock that you should keep an eye out on, Adani Power. So look at BHEL in the pre-open trade. It's trading flat as we speak. Adani Power is up 3%. Now the company posted numbers yesterday. It has reported a profit of 8,759 crore rupees. That is up around 83%. So good set of numbers coming in for this particular counter, and you can see the impact, 3% uptick there. Vedanta, now Twin Star has offloaded 15.4 crore shares, or you can say 4% stake in the company through bulk deals. Stock is right now on a flattish note in the pre-open trade. So this stock, keep an eye on that. Radico Khaitan should come up for you. The company reported its numbers yesterday. It reported a net profit of 68 crore rupees in the June quarter. And the revenue from operations also stood at 954 odd crore rupees. The stock is up 2% as we speak. But I want to come to you, Akshay, and very good morning first of all. And we were discussing, Bharti Airtel and Aisha Motors. Both these companies posted stellar set of numbers if we talk about the first quarter earnings. What are your thoughts, and what do the technical charts now suggest for these two counters?
For Bharti Airtel, see, the broader chart structure is still strong. The support which we look at as far as short-term trading goes would be 860. We closed around 869 yesterday. So considering the results being out, we have to see how the market digests the results, because this result season is pretty funny. Sometimes results are good, the stock reacts negatively, or vice versa. So I would suggest that the first trigger for any uptick in the stock would be the break of the prior lows, which would be around 885. So if 885 is taken out, that would be a signal that you can take a trade on the long side in Bharti Airtel. That would be your buy trigger, and that can possibly see the stock heading for 900 or 905. Now, mind you, in the derivative segment, 900 has significant presence of call writing. So that would offer a strong resistance as far your day trading or short-term trading goes. So it's mighty important that 900 is overtaken by Bharti Airtel before we see any major uptick in the stock. As the current reading stands, we are setting up for possibly a target of 900, but that comes with a condition to buy above yesterday's high. If it doesn't, and if it shows some bit of a sideways action or a downside move, then the right point to pick up the stock would be around the 850 or 855 mark.
Right. Let's now pay attention to the pre-open trades which have settled down, and let's look at the high beta space, which basically sets the sentiment in the broader market. IRFC up to a fresh record high, 4.7% on the green, 46.80. Zomato, very nice earnings, Tanya. A shade of green on the profit side, even if the profit is just 2 crores. Up 2.8% at 89. Fresh record high on Satluj Jal Vikas Nigam Limited, 58.65, up 2.5%. Paytm in the green, 2.5% higher, 785. And I am also looking at stocks which are showing fairly strong traction. We had the management of KEC International yesterday with us, fresh record high, 667, 3.2% higher. Radico 1.7% higher at 1473. Let's get Akshay into the conversation. Okay, let's start because the markets have opened and in the green tick. Nifty up 80 points, 19,460. Bank Nifty 153 points higher, 44,660. So for after a 3-day down tick, the first day of a fresh weekly expiry starts in the green. Now let's look at stocks that are doing fantastically well in terms of the price structure. As far as the top gainers are concerned on the Nifty 50, it's Hindalco, so metals are shining, up 2%, 463. Aisha Motors, fantastic earnings, 2.7% higher, 3465. Cipla, we'll mark this a little later, but it's now touching 1200, a fresh 52-week high, 2.7% higher. Coal India, Tata Steel, M&M, all up in the green. Let's look at what's happening on the F&O space. Dabur, it had fallen fairly sharply, very smooth recovery coming in, 3.5% higher, 574. State Bank of SBI Life 1.6% higher, 1276. Let's get in Akshay in this conversation. Akshay, a gap up that I'm seeing on the Nifty, now up 93. Is there an early transaction that you'd like to do on the option side on the Nifty?
Well, on the option side, if you would look at a Nifty, today being the last day of the trading week, if you would be a buyer in options, especially on a gap up, it would be a slightly risky bet considering the fact that the momentum is broadly on the lower end in the Nifty and the data points are still not so encouraging that you will have a major move on the upside. So if you're a buyer in options, I would suggest you wait for a slight dip, let the market show some cool off. The ideal level to enter on the long side of the trade would be if you get Nifty somewhere in the range of 19,450 to 19,430 range, slightly a dip of 30-40 points. That would just settle down things and you can place your option buy trade by buying a 19,450 call, and this trade would only be for an intraday trade. And we are expecting a bump up which can at the best go till 19,525. These are all spot levels for the Nifty index, and this would be an intraday trade which I recommend. So the bounce back can see the option trade. If you buy an at the money option, the delta is 0.5. So a 50 to 70 rupee up move would result in a 20 to 25 point upside in the premium of the 19,450 call.
Okay, guys, let's get back to the markets. That's the option call that's coming for you. And let's see where the action is concentrated in the large cap space. Reliance, 0.5% higher, 2489. Let's look at what HDFC Bank is doing, 0.2% higher, 1632. Infosys, 0.3% higher, 1368. Remember, these are the three index heavyweights on the Nifty. If they are in the green, then there is no stopping the index after a 3-day fall. Nifty is now consolidating. In the first 3 minutes, you've seen a 100-point uptick, now at 19,475. Bank Nifty is up 135 points at 44,650. It's a sea of green across the market, 155 points higher on the Nifty IT index. It's reclaimed the 30,000 level. Let's look at the broader markets where the advanced decline ratio is very, very strong, 1:1, 950 is to 922. And Tanya, the entire space, we track 17 indices, all 17 of them are in the green. The advanced decline ratio of the Nifty is 9:1. So 45 shares are in the green, just 5 in the red. The broader NSE 500, the advanced decline is again 9:1, 450 stocks in the green and just 50 stocks in the red. So a very, very strong opening. Nifty's just hit a century, up 105 points at 19,485, and the bank Nifty is now 200 points higher, 44,703. So short covering, fresh buying, and a new month weekly settlement that's set in is now enthusing the bulls after a 3-day fall. Tanya, what are you seeing?
Shell, I think I can't take my eyes off from Zomato. The stock is up 8%, as you were saying as well. The company posted stellar set of numbers, though the profit was only 2 crore, but it turned obviously profitable. So the stock is up 8% as we speak. And I want to come to you, Avinash, for this one. So what are your thoughts now on Zomato, after the earnings? Because we have been discussing this new age tech pack and, all the concerns about profitability and all. I mean, what are your thoughts after the earnings?
I think, Tanya, yesterday, the 2 crore number is little misleading. But from the top line side, the company did a very strong performance, a 70% growth in the top line, and operating losses have come down to 48 crores, compared to 300 crores in the Q1 of last year. So I think there's a dramatic improvement in the cost, metric management. And I think that is what the market is excited about, because hopefully, this loss gets smaller and smaller in the coming quarters. That would mean that profitability would become operating profit positive. And I think that is going to be a key re-rating trigger for the stock. I think even at these levels, the stock has been excited and people are buying because they hope that obviously not FY24, but at least FY25, the company could generate a positive operating EBITDA and obviously then start generating, cash flow, which is very important for the stock. So I think net numbers are very strong. And I think hopefully, as the food app business goes, there are only two players in India. So virtually it's a quasi monopoly between these two companies. So I think there's a lot of re-rating expected ahead, but yes, numbers have to come in. I would believe, that 7-8% is just the beginning of a big long-term story.
Okay, absolutely. And what about you, Akshay? Let's take a technical check as well. What do the technical charts suggest now for Zomato?
For Zomato, see the reaction or the strong pickup is momentum is because of the result. It's a strong chart structure, no doubt. 94 is where we are, and possibly the momentum has legs to take this move right up till 100 or 102. So right now we are. It's the phase where you are riding the momentum. So if you want to buy and ride the momentum, 102 is the target, the stop loss of days low. If you are holding on to the stock, I would say 102 is where the stock is heading for on a short-term basis. Besides, if you are slightly eyeing it from a 1.5 to 2 month perspective, I believe the structure is strong enough to take it all the way till 120. So a strong chart structure, no signs of any major correction or reversal. Be invested in this stock for gains till 120 on a medium term basis.
Right. Now is a good time as any to look at the broader markets, Tanya. The Nifty is now consolidating 100 points higher at 19,482. And like I said, both the IT and the bank Nifty are up in the green. Let's again look at the broader picture. The top performing index is the Nifty Pharma Index, up 1% at 15,265. Remember, this is again a near record level for the index. Let me just check. And if you look at the FNO space, I have, Tanya, about 18 stocks in the pharma FNO, and 16 are in the green, led by Cipla. Let's discuss Cipla if we can get the chart on air. Remember, a series of very positive news is coming on this particular sector, this particular stock. Up 4%, and the open interest is 2.8% higher. And let's discuss that news, which is private equity players are now seeking to bid for the promoters' 32% stake in the company. It's been a known fact that promoters have over the past decade or so wanted to at least piecemeal in cash their company. Remember, Cipla was set up somewhere in the early 1930s, and the Hamid family, which has done a yeoman's job over the last so many decades in providing low cost pharmaceutical products, not only to India but across the world, especially against AIDS in Africa, now want to exit. So over the last 3-4 days, this news is coming in. Let's first get Avinash into this conversation. Avinash, Cipla, one of those rare blue chips where it's very difficult to find fault either in the balance sheet or on the way promoters work. Sterling balance sheet and sterling, how should I say, promoter quality. What would you comment should this transaction happening with a private equity player and promoters either sell a minority stake, become minority themselves, or exit completely?
I think Shell, I think Cipla is definitely looking interesting considering the fact that now it's very clear that private equity players like BlackRock are seriously looking at putting money in the company. And I think once the deal fructifies, you could see a further re-rating because clearly, in terms of the balance sheet, in terms of the cash flows, in terms of the product positioning, this is a great company which has been managed very well by the existing promoters. My sense is that, whenever an MNC comes in, it gets a lot of experience and relationships on board. And I think the multiple benefits of this would obviously be seen on their export market strategy. My sense is that, even from a longer term perspective, from say 12 to 18 months, somebody wants to get into a quality pharma business, then I think Cipla definitely fits the bill. You have to face the volatility, but I think any correction or any decline also one should accumulate. So we are positive on the stock, and on a longer term basis, we feel that a lot of value could unfold going forward.
Absolutely. Cipla is the top gainer on at least the pharma space. The volume that you see is about 1.3 million shares already traded in the first 10 minutes of trade, a record high, 12.24. Very strong change in open interest. Let's get Akshay into the conversation. Akshay, everything going well for the chart. Would you chase the momentum now?
If it's Cipla, which we spoke of, yes, definitely. It's a highly overbought stock, but it's best to be where the momentum is, especially if you are a short-term trader. So it has got past the 1185 resistance zone, staging a breakout in intraday trade that sets it up for a target of around 1250. We are currently trading around 1225. So you can definitely chase the momentum for a quick gain of 25-30 bucks in this from the current tradings. But I would just say that you can buy here just for a trading with a 3 to 4 day perspective. If you're planning to go slightly for a 15-20 day trade, then I would suggest buy in parcels because you can get a slight dip in the next week around 1200, which would be the right level to re-enter for a positional target of near 1280 on the upside.
While the balance sheet and the promoter quality has never ever been a question mark on Cipla, I'd just like to highlight the 10-year CAGR performance on this particular stock. It's been an underperformer for two reasons: that over the last 5 years, nothing much has happened in the pharma space as far as markets are concerned. But given the record high and the momentum of news, the stock is likely to do well from current levels. The 10-year CAGR is 11%, like I said, not much, but that's how markets work. And for years together, you might not see a stock outperform, but suddenly some news, some trigger in the sector, and then you'll see it flying. And that's happened both for Cipla as well as the pharma index, record high, and this very, very strong news coming in. Should the promoters completely exit, it would mean an open offer to be for existing shareholders, because that is how SEBI guidelines work, and perhaps that's the reason why we are seeing such strong traction both in terms of price and block deals on Cipla now happening at 1227 days high, fresh record on the counter. That's as far as Cipla is concerned. But let me hand it over to Tanya. Tanya, I am sure you can't take your eyes off Zomato.
Absolutely, Shail. The stock is on a roll, but I think we should discuss auto sector as well. This sector is also, in a cyclical uptrend. and it is obviously supported by a sharp recovery in urban demand and a shift in preference towards EVs, and long-term fundamentals also remain intact. So I want to come to you, Avinash, first for this auto pack. Of course, Aisha is doing pretty well in today's trading session on the back of stellar Q1 earnings. MRF, Motherson, these are some of the top gainers from today's trading session. So what are your thoughts on entire auto space, especially after the auto sales numbers and the earnings that have come so far?
I think within the auto pack, I think we continue to be positive on Tata Motors. We believe that the best is yet to come. The company has done a very splendid job on the JLR front, plus the domestic business as far as the commercial vehicle and the passenger car business goes is gaining momentum. In fact, the electric vehicle market share is more than 40%. So I think going forward, a larger electric vehicle base would mean an incremental effect on Tata Motors. And the second stock we are very positive is Mahindra and Mahindra. The company will be posting their quarterly numbers today. The bigger trigger could come in, from their announcement recently that Temasek is going to take a strategic stake in their electric vehicle business. That would mean a significant re-rating for the company, because even Mahindra is talking big on the electric vehicle side. The core business continues to do well. The automotive business is running on all the four cylinders, and almost a 2-year waiting period for their top selling vehicles. The tractor business is also generating steady cash flow. So I think you're going to see a good momentum on the profitability side. And obviously, if the business outlook and commentary shared by the management is positive, then I think you could expect a further re-rating in Mahindra and Mahindra also, because I believe that it's one of the steady and one of the most well positioned players compared to Maruti or Tata Motors. Definitely relatively undervalued.
Okay, and what about you, Akshay? Any stocks that you like from this vertical?
Yeah. So from the auto pack, one stock which clearly stands out for me is Ashok Leyland. If you look
Okay.
at the chart structure of Ashok Leyland, this stock has given a strong breakout at the levels of 170 a few trading sessions back. And it has gone into its shell in the last 4 5 trading sessions, where it's been confined in a range of 178 to 185. But our belief is that this stock is heading for 200 plus levels soon. So you can place your buy orders in this stock with a stop loss below 170. The chart structure is strong, the derivative readings are good, and definitely this is a chart which holds good promise for Ashok Leyland to move 200 plus in the month of August.
Tanya, I'll have to again intrude here. नज़र नहीं हट रही, क्या करें? सिप्ला आपको दोबारा देखना पड़ेगा. Fresh record high 1236, 6% higher. It's the top traded counter in the F&O space. The turnover at the moment is 230 crores. It's already taken out yesterday's daily average, and about 28 lakh shares. Just 1 second. I think yes, about 20 lakh shares have 21 lakh shares have been traded on Cipla, and very strong traction coming on this counter based on the news that's on Pink Dailies, that promoters are in conversation with some private equity players to sell a large minority stake in the company, or maybe even exit fully. We've seen a lot of block deals, Tanya, happening just here. And because of Zomato and the fantastic numbers that it's put up, the entire high beta internet space is now showing very strong gains. Zomato is up about 10%. 1 second, let me just show you some great data. Okay, Zomato is up 10% at 95.65. Policy Bazaar is up 4.5%, 755. Delivery is up 3.8%, 413. Nykaa is up 2.2%, 146. Paytm gains 2% at 783. So it's a spark that's been lit by Zomato across the entire space of these listed internet companies. Remember, many of them, in fact all of them, are trading way below their IPO prices and substantially below their all-time highs. but what is also a fact that they are now trading substantially higher than what their most recent lows were. Let's look at other stocks to track, and this is for Akshay. Another breakout in Dixon Technologies. Akshay, how are you looking at the charts? It's a high beta, high price stock, 46.34, but I see a lot of block deals happening. What are the charts on Dixon telling you?
On Dixon Technologies, there is one important level which we need to keep a note of. That is 4770. Now, this resistance is one mighty important resistance because multiple times since July 2023, we have seen failures at this particular level. So, a reattempt being made in the month of July and August now is just showing that the demand is picking up stronger near the resistance level for to preempt a breakout here because the move is really going to be at a fast pace once we take out the 4770 mark, and you can get a targets of around 5920 on the upside. So a preemptive move, if you're targeting a breakout, the stop loss should be days low. If you want to wait for the breakout, take a confirmation and go after the breakout is staged, then wait for the 4770 to be broken off. Whatever case it is, your stop loss should be below your days low, which is 3950. The chances or the probability of a breakout look promising, and if it does, the target should be around 5950 to 5990 on the upside.
Shail, I think we should also look at KPIT Tech.
Right. This is as good a time. Yeah, Tanya, please continue.
No, I was saying I think we should also look at KPIT Tech. If you look at the stock right now, it's up to the tune of 4%. What's happening here, Akshay, and what do the technical charts suggest for KPIT Tech?
So Tanya, if you look at the charts of KPIT, it's been a chart where the prices have been stuck in a range. The lower end of the range is 1030 and the upper end of the range is 1150. Since this activity has been on since the month of June. Now, what we understand is the prices are setting up for a breakout above the resistance zone. It's just a matter of time when would this happen. So, I would say if you are a short-term trader, wait for the breakout because breakouts are a difficult situation to deal with always. If you do not worry and you can hold this trade for a slightly longer time, I believe this breakout should be on soon. Your target should be 1200 plus, and your stop loss should be currently placed below 1050 on this buy trade.
Right. Tanya, this is a good time as any to look at the broader markets. The Nifty is now consolidating, still up 100 points, 19,477. Remember, the first two candles of the 15-minute break will be at 9:45. But it's a fairly good move that's come in so far. We've seen a gap up on the Nifty, mainly on account of a strong traction in Infosys, HDFC Bank, Reliance Industries. Very strong advanced decline here at about 8:1. And of course, the Bank Nifty 126 points higher at 44,640 so far. Tanya.
Okay, so let me thank Akshay. Thank you so much, Akshay. I know you're short of time, but thank you so much for sharing these wonderful ideas with us and being with us here on Business Today Television. So, Avinash, I was talking about KPIT Tech and some other names from IT space. IT Pack is also shining today, if you see. Any stocks that you like from mid-cap IT?
We like persistent systems. I think our belief is that from the mid-cap IT space, you could see a lot of traction coming in because the larger companies are struggling to grow. There have been strong headwinds as far as the profitability margins are concerned. So I think clearly persistent and KPIT Tech, because they operate in very niche markets, have a very strong order book. And I think the earnings growth trajectory over the next, say, 3 to 4 quarters is going to be quite steady. We don't believe there are going to be major headwinds for the margins. And most importantly, I think their clientele and the order book is quite solid. So I think these two companies can be looked upon, in a market which is a slightly contra market. But yes, longer term, I think prospects will definitely give a decent risk reward to investors.
Let's get Avinash's view on the defense sector. Let me just mark some prices. BEL 1.7%, 1.4% higher, 126.35. We've seen strong traction coming on Masstock, a third of a percent higher, 1852. BEML flat at 2048. But these are all high beta counters and they are resonating fairly strongly. The top gainer today is Midhani, 2.5% higher, fresh record high, 388. Avinash, last 1 year and especially the last 6 odd months have been one of those dream runs that we've seen on the entire defense space. Various reasons, problems on both borders, strong order books coming in for domestic players, both from the Indian armed forces as also overseas in terms of exports. What would be your top 1 or 2 picks in the defense space when you look at the medium term possibilities?
I think, Shell, the defense space is a very interesting space, considering that the kind of order book most companies have got gives them strong visibility for the next 2 to 3 years. And I think now a lot of institutional activity is being seen in these stocks. Our picks are Bharat Electronics and Premier Explosives. Bharat Electronics, we believe, has a very good kind of scalability potential, considering that it's a very low leveraged kind of company, has a very strong order book and an assured business, considering that entire business is earmarked, at least next 2 years business is assured. So here I think the stock is available at a reasonable valuation. I think if one were to look at the next 12 to 15 months, a decent upside of at least 18-20% is possible. And Premier Explosives is a small, defense company which specializes in small range missiles. So I think this is also, pretty interesting, considering that the order book in the last 2 to 3 months has been quite solid. And I think now it's all a question of execution. So Premier Explosives and Bharat Electronics could be better bets. Although, the other players like Hindustan Aeronautics, Mazgaon Dock or Garden Reach could also be accumulated on market declines. Here the problem is the stocks have risen very fast in a very short time. So I think one needs to buy on declines here.
Absolutely. If you see the rally that's happened on Masdoc, Garden Reach Shipbuilders, and of course Cochin Shipyard, it's the stuff that dreams are made of. Some of these stocks have multiplied 3-4 times, especially Masdoc. So very strong views coming in from Avinash when it comes to the medium term projections, but stocks have run up sharply. So Avinash's picks are BEL and of course Premier Explosives. Let's look at BEL, the chart that's there in front of us. At 126, it's consolidating near all-time highs of 133. Remember, this is post a stock split that's come in about a couple of months ago. I don't see it somehow on this chart, but I distinctly remember it was at least a 5-for-1 stock split. But be that as it may, this is his pick, and of course Premier Explosives. Again, quality stocks are at a record high, and Premier is no different at about 1018 for you. The stock was at 430 about 30-40 trading sessions, but such has been the sharp rally even in defense space that Premier is now quoting at a premium valuation of about 1018. Tanya, what are you watching?
Absolutely, Shail. So we should also look at LIC Housing Finance. So the company posted a stellar set of earnings, and the stock, if you see, that should come up for you on screen. That is up around 6.5% in today's trading session. It is the top gainer from mid cap pack. So Avinash, your thoughts on this counter, LIC Housing Finance?
I think housing finance companies have been doing pretty well. If you look at the companies of all the other comparable competitors like Canfin Homes, PNB Housing, I think definitely the housing finance market has now improved. More importantly, I think the blended yield which most of these housing finance companies are getting is definitely positive. And with credit growth in double digits, I think most of these companies are now benefiting. They are expanding their balance sheets, and I think the opportunity for the affordable housing market is a very large market. So to that extent, LIC Housing Finance, which has got a parentage from LIC, should definitely do well. I think this is a very strong quarter after a very long lean period for them. So hopefully, I think they should capitalize on this, and I think we could expect some further re-rating.
Okay, absolutely. That's the word coming in. But now let's shift our focus to Kaynes Technologies. So the company reported earnings for the first quarter and witnessed a decline in its performance compared to the previous quarter. But when considering the year-on-year performance, the net profit was supported by other income. We have the management with us to decode the Q1 fine print for you. We have with us Jairam Sampath, who is the CFO at Kaynes Technologies. Mr. Sampath, thank you so much for taking the time out and joining us here on Business Today Television. I want to start with the order book first. So your order book of 3,000 crore rupees, 3,000 crore, how much of it will be executed in the current year? And can you also tell us about the large orders that are in your pipeline?
So thank you. Good morning to you all. Thank you for having me here. So basically, the order book, what we have published is 3,000 crores as of 30th of June. This actually translates into an order inflow of about 215 crores a month. So which is up from the earlier numbers of 150 crores a month and then it moved to 175 crores a month. Why this is significant is that it means that there is good business and order inflow. Now this 3,000 crores, we typically will take about 1.5 years time to complete this order book. This year we have guided revenue of about 1,700, maybe it will be 1,700 to 1,800 crores revenue. First quarter we have done around 300 crores in the operating income side. And we think that we definitely will meet the guidance revenue that we have given. And I can see a lot of tailwinds in the marketplace across all the sectors. Key sectors that are firing up, as you know, I think it's there in the news too. Railway signaling is one of our primary sectors, used to be one of our strong sectors earlier on. It was muted for a few years earlier, but today it's again coming up. Railway signaling, industrial, automotive remains a strong sector. EV is expected to be growing from the Q2 onwards. And then, of course, we have IT sector, which got a lot of boost with announcements yesterday. So we straddle 6 different sectors, and all of them are firing in all cylinders at this point in time. So it's a question of how we execute the orders.
Mr. Sampath, good morning and welcome to BTTV. Shail Bhatnagar this side. We'll start with the PCR firing a long-term chart for your stock, and I'm sure it's been one hell of a ride for you. We've seen the price at 1,004 rupees somewhere in mid-May, and you've peaked at about 1920 somewhere on 26th of July. So a 95% rise as far as the stock price is concerned, and I'm sure it's an onerous task for you to maintain these kind of expectations from shareholders. Are you sleeping easy these days?
Yeah, sleeping less, but definitely sleeping with confidence that things are happening. Primarily, we all live well if the markets do well, especially our customers do well. And that is really firing on all cylinders, as I said earlier on. And I think government is also taking the right steps in the right direction. So I will just like to nuance this entire thing. You see, the demand for our products and services is dependent on import substitution a lot. And as of now, if you just compute the numbers imported in FY22, almost 2 lakh crore worth of material, which is a target market for us, is imported. And if that gets converted into domestic, then there is no shortage of business for not only us, but many other companies. So we see that traction happening in the ground too. The order book has gone up to about 212 crores a month, which roughly means that we are actually setting up our company for beyond 2,000 crores in the short run. So this year, maybe we'll complete 1,700, 1,800. We have to gear up with capacities and all that. But as we go forward, this 40-45% of EBITDA sorry, 45% of CAGR that we are talking about is eminently doable. So specifically about our company, we straddle all the different sectors. So we generally overcome any weakness in any one particular business vertical. So that is one big benefit. And second thing is our margins are dependent on many sectors. We specialize in low to medium volume, high mix, high technology, high criticality production. And a lot of it is coming into India today. So with all these factors, and also we are also doing what is known as cautious expansion of our footprint in the electronic supply chain and value chain. We have announced that we will go for OSAT, and also we will put up a bare PCB plant. So all of these things in the future, maybe they bear fruit after 2 years. In the meanwhile, our existing business will, with all its strong tailwinds, is going to keep us busy. So the whole activity is now in terms of creating capacities, doing new projects, absorbing technology, and setting the organization for the new generation of scale that Indian companies are witnessing today.
Jairam, let's dig a little deeper into the business of your company. Tell us how is the client concentration if you look at the top 10 in terms of revenue contribution, about 300 crores worth of revenue in the first quarter. How much do top 10 customers contribute in terms of top line?
Yeah, Shail. It's an interesting question. We have more than 350 odd clients. Top 10 contribute about, on an average, 50 to 60% of our business. And what we see a trend is that all of these 10 customers are kind of growing hand in hand, and it won't be long to say that we'll have very strong set of large customers coming in. They all belong to different sectors too.
Absolutely. And Mr. Sampath, the company has, an ambitious plan.
Okay. And yeah, Tanya, continue, please.
Yeah, thank you so much, Shail. So I was saying, Mr. Sampath, that the company has an, ambitious plan to increase aerospace's contribution to its revenue. And currently, if you see, the aerospace segment accounts for a significant portion of your company's operations. But how do you plan to increase, its revenue contribution going forward?
Yeah, so as far as aerospace is concerned, we have a very large client, and during the last year, we have completed what we call the pilot lots and approvals, etc. And we have had visits during this quarter, a couple of visits from the same client. And we see a huge tailwind in that business because India is buying a lot of aircrafts, and there is a pressure on all of these aircraft manufacturers to show value addition within India, the real value addition, not really leading value addition. So to that extent, we expect this aerospace business to really take off. And on the strategic electronics side also, we see a lot of traction, a lot of upgradation of our defenses and all that is happening, and we are also beneficiary in that respect.
Sir, let's focus on the 2 or 3 problems that the wider sector, the information technology sector, is facing. One of them is, of course, attrition and hiring. Till about 2020 and that particular year, a lot of companies were facing problems in retaining employees. Attrition levels were higher. Over the last 2 quarters, of course, these 2 problems have somehow come under control. You are seeing much lower attrition, at the same time much lower hiring as well. What are your rates in terms of overall staff quitting as a percentage of total staff, and of course what is the hiring pipeline?
Yeah, so as far as we are concerned, we belong to the hardware sector. So obviously, we don't have ready-made staff available in the market that we can hire and put them on use. So we do recruit from the ITIs and the polytechnics and also engineering colleges, and then we do our own intensive training in each of these sectors, etc. So typically, we have not seen a huge amount of attrition in the operating level. Of course, we've got to work hard to make sure that employees are retained, because this sector is also at this point in time booming, and there will be attempts made by other peer group companies to attract talent. So what we have done actually in the past, we've realized this even during the listing time. We have one of the largest program for largest footprint, if I say so, for ESOP. We have covered more than about close to about 500 employees in the ESOP during the IPO listing. And this includes all the operating level guys and everybody, junior to senior staff. So this gives us some kind of at least a good story for the people, saying that the company is sharing its benefits with the employees and so on. And this helps as a mode for attrition. And also, when we go forward into other areas like ATMP, that is OSAT, that is semiconductor, PCB, etc., and also some other newer technology, like you said, information technology outsourcing, or let's say telecom, etc. We also have to onboard people who may not necessarily be familiar to us, because we go into newer areas. In many cases, we have to get people from outside the country too, because the country may not have the talent pipeline that's required. So we are taking all of those steps. So we understand that next 5 to 10 years is the time when we can benefit from this huge tailwind that is happening, and you can take off this company into a larger orbit. For that, we may have to do some of these changes in our mindset. We should acquire people from outside the country also, and so on. So we have done that, and also one look at our company's various activities, we file into the exchanges, etc. You will know that our newer people are coming onto the board, and then we are onboarding people. So we're looking at the entire South Asia as our source for talent, and we'll make sure that the requisite talent is made available. There are a lot of people available. We have a strong training program at the working level. So I think it's going to be challenging, but it will be a very interesting challenge.
Okay, absolutely got that. And on that wonderful note, thank you so much, Mr. Sampath, for taking the time out and sharing these wonderful insights with us and being with us here on Business Today Television. Thank you so much.
Thank you, Tanya ji. Thank you, Shail ji.
So let's get back to the markets now, and shall look at entire IT pack. I mean, the stocks are on a roll. Emphasis, LTI Mindtree, that these counters should come up for you. Wipro, Tech Mahindra, all up to the tune of 1 to 2% in trading in this trading session. HCL Tech, Coforge, among the top gainers, and they are actually the top gainers of today's trading session.
Absolutely, Tanya, you spotted the sector very well. Across the board, we are seeing very, very strong traction coming in. Let's start with the index, 1.6% higher at 30,461. Sheer breakout happening on the price itself, and the entire space on the IT side is buzzing with gains. Let me start with the Infosys. Tanya, you will be surprised to know that the top 3 contributors on the Nifty in terms of gains. So Nifty is up 74 points. L&T Mindtree is contributing 20 points to that. Infosys is again contributing 20, and TCS is contributing 13 points. So the top 3 gainers, the top 3 highest contributors in terms of gainers on the Nifty are IT stocks, and they are Infosys, TCS, and of course L&T Mindtree. Now what's really interesting is if you look at Infosys, I see a very strong traction on the F&O space as well. You've mentioned the number just about now. It's a 1.5% rise in open interest. The stock is up 1.2%. A shade closer to 1400 that we've seen. Remember, the numbers were disastrous, but as far as Infosys is concerned, all dips have been purchased for the last so many quarters. So we have 4 plus 4, 8, 12, 15 stocks in the F&O technology space, all 15 of them in the green, either showing a very high degree of short covering or a build-up of long positions. Either way, it's the bulls that roost. And in terms of cash counters, Intellect Design is booming. The company had announced its earnings about 2-3 days ago. It's crossed the 700-point mark, fresh record high, I think. No, it's a fresh 52-week high. These levels were seen in May 2022, so it's a 15-18 month high. And of course, you had picked KPIT Technologies right at the beginning, now at 1121, up 4%. Tanya.
Okay, absolutely. That was, the data for you, the markets data, of course. And thank you so much, Shail, as always, for sharing, this data with us and for being with us here on Business Today Television. So, if you look at the markets at this point in time, we are still holding on to the gains. 65,480 is the level where we are at as we speak, and Nifty also holding that 19,450 mark, 75 points uptick there on your screen. So, let's see, whether this momentum will sustain or not, and for that you don't have to go anywhere, you just have to stay tuned to Business Today Television. You don't have to, don't forget to follow us on our social media platforms like Facebook, Twitter, LinkedIn and Instagram. So stay tuned for all the latest market updates, and many thanks for watching.